Three, two, one, liftoff.
Cannabinoid Connect, the nation's most diverse cannabis-related podcast.
Right. We are recording Guillermo Rodriguez, the virtual CFO and cannabis industry expert. What is going on, my man?
I'm good. How are you, Kevin? It's good to be here.
I'm good. I'm excited to talk with you tonight. There's been a lot of exciting developments taking place within the cannabis industry. Today is May 1st, where we're talking this evening. But as of yesterday, April 30th, the DEA has made their decision to reclassify cannabis to Schedule 3. So, more access in terms of opening up medical research. And then, of course, there's impacts on the financial side, which I'd love to cover with you later on in the show, man.
Absolutely.
Yeah. Well, then let's just dig right into it and start with you, Guillermo. Talk to us about your journey into the cannabis sector. I know from reading your background and expertise, you were heavy in the traditional finance roles, but then you've become this virtual CFO in cannabis. So tell us about the moment that you decided to make this shift and how past experiences have influenced your decision and your current role.
Absolutely. Yeah, so as you said, traditional, that very much spells it out because I was a traditional accountant. I've been a CPA right at about 20 years. And when I started, I went right into working in industry, like most CPAs can go and work for a CPA firm. I went to go work for a really large company, a $2 to $4 billion contractor out of San Antonio, right after I graduated college. And I thought, I was going to work in financial accounting, do tax, because that's really all I knew about accounting. And that's kind of what you're taught in college. But it didn't take me too long to figure out what I really wanted to do was learn more about business in general. So large companies like the one I worked for, as opposed to small businesses, they have a risk management group, a treasury operations, a finance person, accounting, a CPA. And so I had the chance to really learn all those different areas of business over my career and my time there. And it was really about the time that maybe about 7 years into my career, I guess I'm just going to call it the halfway point, is when I switched more into a finance role. And the way I explain that is what I do now as a virtual CFO is that we help our clients look into the future, but using that historical data, right? So good accounting is never going to stop being important. It's the historical, it's our starting point, but it's really just the past, right? And how do we use that to help business owners make better decisions? But my introduction, just to get into my story into that, was working in big corporate. When we were starting to do acquisitions, I was the person that was chosen to do the financial statement forecasting, right? So when you bring in a new business, you see that, there's a target. You put together a set of forecasted financial statements to see what the combined businesses are going to look like. You want to just make sure that the acquisition makes sense, and then we want to use that information to get lending for the acquisition and approval and that kind of thing. And so that was really my start to it, and then it just kind of rolled forward from there because the next thing I was working on was cash forecasting, right? So we had a large business. We had to get a good understanding of how cash moved. And so there was large fluctuations in cash week to week. So I started doing the forecasting. And then that led more into a corporate finance career. But it was right around.
Which did you prefer of the two? Sorry to cut you off, but
yeah, I would say the historical stuff is like comfortable as accountants. You know what you're supposed to do. There's an end point, things reconcile, and you did a good job, right? And so that's what was really satisfying about doing financial statements and being the financial accountant, is that things reconciled. So it's really both. But now I get to really have these conversations with business owners about where they're trying to take the business, and this advisory work that we do helps really drive the business forward from a finance standpoint. So while that was satisfying in its own ways, I think this forward looking as a virtual CFO, I get to really have a bigger impact on clients and a wider variety of businesses.
Well, you're using that well-rounded expertise that you mentioned earlier, and you can kind of see the whole scope, right? As opposed to maybe just one area or one specific niche of accounting. So tell us about that transition from, like you said, the forecasting, the statements to getting into this more of advisory role. I mean, when did that decision take place? Was there a moment?
Yeah, at the time, those years leading up to when I left the corporate world, I was getting into I was teaching yoga, I was learning about Ayurvedic medicine, and so really like health, wellness started to become a big passion of mine, and I started learning more about preventative medicine, plant medicine through Ayurveda, and how plants are used to help your body to prevent disease, and not from a reactionatory standpoint, but really much better way to manage health is prevention. And so when I rolled up to the COVID year and a lot of the things that were going on were very reactive, I felt, I think it's when I said like, I want the flexibility to work with businesses or not be in an environment where I feel so restricted with this, where I can help my health and I can help others. And so, um, I decided to leave at that time because I felt very restricted with not being able to go places or work in an office or just different things that were happening in my company. Um, we left on good terms, but at that point it was time to move on. So I started doing consulting, but it really took me about a year to learn about cannabis because I was really when you're a virtual CFO, it's very important to niche and be in a specific niche because when you're health level, you got to really know the industry regulations. You got to really think ahead. And so you got to be immersed in whether you're helping lawyers or doctors or cannabis companies. And so I got really immersed in learning about the accounting, which was a lot to do with cost accounting. And that was my background in construction. And so I said, well, I need to start getting involved. And so I joined a trade group out of South Dakota at the time to try to pass a proposition to legalize a recreational use program there. Um, and then from there, I just started getting more involved in the industry. And then it was maybe another 6 months after that, I joined Summit Virtual CFO by Anders. They were growing their cannabis vertical, and so I came on to help build the cannabis vertical here at Anders.
So I understand, like you mentioned, if you're going to be a virtual CFO, you want to make sure it's niche, it's in a niche industry, or it's to where you can really understand the full landscape of the regulations or how it works, right? How the industry operates. So why cannabis? I mean, were you a consumer or advocate previously, or did you see it as, this is a burgeoning industry where there's a lot of opportunity, or both?
Yeah, it's really both because to be honest, at the time I was like, it's a great opportunity, but from an advisory standpoint, I think a lot of companies we're still having trouble making profit. And I knew this from the get-go, but cannabis companies can't deduct a lot of overhead expenses. And so
280E.
it's
Yeah.
280E, right? And so it actually, if I was just trying to pick a vertical, I'll be honest, or a niche, it's a tough one to get into. Like there's a lot of mistrust, and then there's not enough cash flow in the size of businesses that use virtual CFOs. And so it's been a journey kind of working through it. But like I said, my passion were really two things around
Plants.
wellness and
Yeah.
empowerment. And I knew
What
that's
was
what's
that
happening in
term?
cannabis.
What was that term you mentioned with your wellness journey? Ayurvedic?
Ayurveda.
Ayurveda. Sorry, I butchered that. What is that? I'm curious.
Yeah, so here's the way I would explain it to you. Like thousands of years ago, the yogis like observed nature, plants, animals, and they started to learn how, this medicine would they started to categorize plants into medicine, nutrition, and various other categories, right? and they started to see how a particular herb helps digestion or different things, and just really it came about by observing nature, right? It comes from India, but the main premise of it, and it really speaks to how all of us are different, and so we have to choose our own path to wellness. It's not
Hmm.
standardized, which is very different from Western medicine, and especially what you saw in COVID, that if you had COVID, the hospital did this procedure to this person, and that's okay because that's conventional medicine. It's intervention. It's a different type of thing. But Ayurveda is more for prevention and wellness. It's something that you can just proactively do ahead of time. And so to me, it really spoke to me because it's like I want to get to know myself. I want to know exactly what I need to do for myself to help myself feel well, to thrive in life, right? And so,
Yeah. How did cannabis help you? I mean, in that regard.
well, so a lot of I'm really the type of the consumer that because that's a big problem, especially in the hemp side of things, right? Is that a lot of it isn't regulated when it comes from dosage to how the products are, the extraction of the products and things like that. So I am one of those consumers that I really have to trust. I really have to know the
Right.
process of how the product is made. And so what really spoke to me are a lot of the minor cannabinoids and the hemp derived products, especially because I'm in Texas, to help with things like sleep. Like I use CBN and CBG for sleep and THCV, and all these things help. Again, it's from a prevention standpoint because sleep is important, right? It helps your body heal. And
Right.
so I've used cannabis more for rest, to recover, and to make my body to help my body restore itself.
Nice. Yeah.
Yeah.
Same here. Yeah. And in Texas, I mean, it being, of course, illegal from a THC standpoint, the minor cannabinoids are thriving, right? And so there's a lot of accessibility to those products, which is great. So let's get back into your role as virtual CFO. So talk to us, being in a niche industry like cannabis, let's talk about some of the unique challenges and benefits that come with managing finances from a virtual standpoint, and how this role differs from, let's say, a traditional CFO position.
Yeah, the main way it differs is when you work with a virtual CFO, as the name says, you work virtually. And so it's not just the virtual CFO, it's a virtual CFO, an accountant, a finance analyst, and a virtual CFO sometimes handles, anywhere from 5 to 15 different clients, depending on the size, right? And so that is the main difference, is that when you work with a virtual CFO, you start to get into a cadence of, okay, we have several meetings during the month, and we're going to meet on the first week of the month. We're going to review financials, and maybe on the second week we review production. We really get into the sales metrics. Third week we're maybe talking about customer metrics, and what's ahead from that standpoint. And so you really get into this really normal cadence of meeting with your virtual CFO. At least that's how we've done it. And it works really well. You have to when you're managing multiple clients. Whereas when you work with an in-house virtual CFO, that's your full-time person. Um, but the big thing is that companies that are our size clients are in the 2.5 to $10 million range. That's the
Hmm.
bulk. We have some bigger, some smaller, but companies of that size cannot afford to hire a full-time CFO. They may hire an accountant, um, that kind of thing. But that is the main difference, is that clients that are in our space, in our size, um, that we work with, they actually don't have a virtual CFO because they don't need one. They don't need all that, a full-time person at that cost. And so that's what this service do, and that's what we do as a virtual CFO, is that we're able to help companies and provide that full finance support at a cost that they could afford. It's usually less than 5% of total revenue, and it's at a fixed cost. We charge our clients weekly. It's fixed. They know what they're going to pay, and if they want to add or reduce services, we can just do that as we go, because we not only do this, what we call advisory, but we do accounting services as well. Like we do the books, we do payables, pay invoices. Those are what we call transactional services. And so we can do all that and just help as the company grows. Maybe they decide to hire a person to do some of that eventually, and we could scale back the services depending on what the client needs.
Yeah. Sounds like y'all wear a lot of different hats when supporting your clients within the accounting umbrella, right? So let's dig into the profit-focused accounting strategies. Can you share specific techniques or strategies that you use to help cannabis businesses maximize their profitability?
Yeah, I love to talk about it. It's when we say profit focused accounting, it's going back to that looking into the future using the historical numbers. And what that means is that we use non-financial drivers to forecast revenue. So when you think about a non-financial driver, and you may have heard the term leading indicator, right? There's indicators that can tell you what's going to happen in the future. And so we want to set up indicators and metrics that will speak to what's going to happen in the future. For forecasting, for example, we're going to look at things like the average size of a transaction and how many transactions are happening during a given month or a given week. And then we're going to look at basket sizes or maybe categories to see what the profitability is. And so at the end of the month, we're not just saying gross margin was 40%. We're going to be like, well, let's look into the various categories and see where the profitability is. And then we're going to try to determine how we can optimize each transaction, not to be the largest, but to be more profitable. And there's different things that happen. Like we could work with a marketing group to try to understand, where are there opportunities to increase the transaction size or add extra items in there. And where the non-financial drivers come into play, a non-financial driver could be how many people walk in a store, right? Tracking these kinds of behaviors to be able to increase that number. Or it could be simply training bud tenders to ask a question and then tracking that conversion rate, right? And those are behaviors that we can control within a business. And when we talk to an owner and ask, have you done this training with your bud tenders? What is the conversion rate? And we see the conversion rate is low. We could look into, well, are they actually doing it? Or do we need more training? And so this way we start to uncover like what are the behaviors within the operations that we can improve, do more of to increase profitability. Because this happens all the time. Like I talked to before the call, we were just talking about how we were at MJ Impact, and so that's in the New Jersey market. So we have quite a few brand new licensees. Talked to a lot of them, and they could tell you, I just got a license. Maybe I think one was in Maryland, and retail stores are doing about 6 million, and that's very common. Is that I talked to cannabis company owners, and they're really in tune with their top level, the sales, but they're really not sure how they're going to get to a profit number, right? And so that's where we really dig in and try to improve that profitability number. And the second step of that, and the question I get all the time is, I made profit last year. I can see it on my income statement, but I don't have any cash in my bank account. And then that's the second part where we really help to understand use a big term here, even though I don't like to use nomenclature, but the conversion cycle of cash. So from the moment that you as an operator purchase inventory to the time that customer pays for it and that cash is in the bank account, 30 days, could be 60 days, could be 90 days, right? Depending on the vertical or how well you're managing the business. So we're going to first try to help understand where you're at with that, and then how do we improve it? I have like clients who it's not, some of it is really simple things. It's like, have you asked this vendor to extend terms from 15 days to 30 days? No, they asked a question, and guess what? The vendor agreed.
They're like, sure. Yeah.
Yeah, that's happened. I mean, that's literally something that's happened within the last few weeks. And so what I call this is low hanging fruit, is that some of these things aren't difficult to uncover, is that I always advise, like, learn who your vendors are, get to know them. I'm speaking to a retailer now, but sometimes it's just a matter of asking the question. If you're on 15-day terms, can we work out 30? Many times those agreements will come into play, and it's fairly simple. Or sharing, discounting. Sometimes a product may be moving, a brand doesn't want it to be sitting on the shelf, and they'll help you out. So really just having those relationships and uh, getting to know your vendors really well, and having those personal relationships really goes a long ways.
Yeah. I mean, you talk about the low hanging fruit, and when it was interesting, I thought is, controlling the behaviors you can control, right? And you mentioned the example of even just training your bud tenders to ask questions, and I'm assuming that's for, like, cross sell or upsell opportunities, right? Like, have you tried this new pre-roll that we have, or this new edible that brand that just rolled out? Little things, right? And
Yeah.
if, like, and to your point, if you can track that effectively, then you can really start to utilize that data to that, again, forecast out and see where you
Yeah.
where you can be.
Yeah, I think brands know, if the bud tender starts to like your brand, it's going to start selling. But is that really good on the retail side, where bud tenders start to push brands that they like and that they may not be the most profitable? They may not be the ones that increase the lifetime value of that customer. So it goes both ways. Whereas, like, I think the brand side uses it differently than the retail side.
Right. Absolutely. Can you talk to us about any common financial mistakes that cannabis businesses make, and how they can avoid these mistakes?
I think it's very common for, like I said, I usually will get a call. One of the most common questions is what I mentioned earlier, is that profit looks good, but cash is off. And one of the reasons why you as a business owner may not know is because there's a disconnect in how you keep your books, right? And what I mean by that is, I'll get a little bit philosophical here for a second, but with accounting, if you can believe that. But there's two sides of everything, right? There's two sides of a coin. There's a yin and a yang. There's female and male. There's two sides to every transaction, is what I'm getting at. And so many times companies keep their books really only recording one side of that transaction. And what I mean is accrual accounting, right? And I don't like to use that term because a lot of folks don't understand what it means, and it can be confusing. So I'm trying to use this analogy to explain it. But essentially, to give an example, is if you're selling inventory, if you're selling a product in 1 month, but you purchased it in the prior month, we want to make sure that the cost of that inventory is in the same month that you sold it, right?
Mm-hmm.
And what this helps you do, it's not just because I'm an accountant and I want everybody to use proper accounting. It's because you're able to see month to month and maybe even week to week how your profitability is looking. If it's 50%, if it's 45% next month, you don't want that to be because of the timing of when you bought your inventory. You want that number to tell you how well you did that month. And so that's the reason why we do accrual accounting, and where we match the cost of the inventory in the same month as when we sold it. So that's very common. That's very common for mainly small businesses, but especially cannabis companies, to not really have that connection in their books, and that they're able to look back and see how well they're doing, so they can make different decisions about product assortment, about how they want to train bud tenders to get the most profitability out of each transaction.
Right. I mean, let's focus on the analytics side then and discuss KPIs that cannabis businesses should prioritize. Uh, so let's start with that, and then maybe talk to us about how those KPIs directly impact business growth, decision making, etc. Et cetera.
Yep. So the first area, I would separate KPIs into three areas.
Okay.
The first one being the most high level, which is historical, and that's financial metrics, right? We all know what those are. It's like I've been referring to gross margin percentage or your very bottom line as a percentage of revenue, right? A good standard is to be, if you look at your net income, this is before tax, um, at the end of month, year, you want to be about 15%. And then if you look at your overhead, this is the cost of your people for a retailer, your rent, marketing expense, somewhere between 25 and 30% of revenue. And then your cost of your product, again for retail, somewhere around 50% would be a really good number, but that can vary greatly. So if you add all that up, you can play with those areas, whether you reduce overhead or increase your profitability to get to 15%. Now, 15% is a good number for any business, but in cannabis, even a company doing really well is going to have a hard time generating cash flow after taxes if you're paying your 280E taxes correctly. Right now, that may go away with the news that we heard today, or will. But going forward, those are the metrics, and kind of, depending on your vertical, you can set those targets to say, where do I want to be at the end of the year when you're doing your plan at the beginning of the year, and that's what we do. That's what we do with our clients. The second piece is average transaction size in retail. This varies widely from market to market. Newer markets have larger transaction sizes, could be in the $80 to $90 a transaction, and then you have some markets that are really tight, like Florida or Oregon, down in the 20s and 30s. And so you want to look at those transaction sizes and see how you can increase that basket size, like the things that we mentioned earlier with cross-selling and upselling. The other bucket is your customer metrics. They're hugely important because that's what's going to inform you how your future is going to look. How many customers you're retaining will tell you how your revenue is going to look in months 2, 3, and 4. Now, we know that the lifetime value of a cannabis client compared to other industries is low, so there is going to be some churn, and you're always really working hard to get new customers. But
Is that because of just how new the industry is and how many brands that are kind of emerging each and every day?
has a lot to do with customer confusion, right? It's just like the consumer not really understanding the value. And the other piece of it is that a large portion of cannabis consumers are mainly in the flower category, and that flower category is driven by price and THC level. Now that trend is only going to get less and less. You see the pre-roll category growing. We were talking about minor cannabinoids earlier, which are more profitable, and as consumers become more educated, that will continue to grow. But to your question, a big part of that is just because of the heavy level of competition and the low level of understanding of how discounting works. And so if you have a lot of retailers, brands that are heavily discounting to obtain market share, it's really affecting the whole industry. The consumers are benefiting because they're going out and getting much cheaper products, but the margins are lower for the retailer. And so that's another area to look at, is to make sure that discounting generates additional profit, and that is a metric that can easily be calculated, or you can use AI and a lot of tools that are attached to your point of sale system that can easily help you determine if a discount is going to work meaning it's going to generate additional sales, or it's actually going to generate more sales, but it's going to eat into your profits.
Mhm.
So
That's good advice. I'm curious to get your thoughts on how operators can navigate the current economic and political environment today, right? So, um, let's first start with, I guess, what we covered initially at the beginning of this episode, which is the reclassification of cannabis being Schedule 1 to Schedule 3. So you kind of touched on just previously about how 280 may be going away because of that. But tell us more from a financial standpoint.
yeah, from a economic standpoint, the first thing you got to understand, right? If you're a business owner, you got to pay yourself. You got to be making more money than you could be making somewhere else, or else why are you going through all that extra hard work to build and run a business? So we're trying to get our clients to whatever their goals are. They may want to take a lesser role in the business. They may want to sell in 5 years. But in any case, while they're operating that business, we want you to have a salary. That's what a CEO makes, right? You're running a business. And so back to a comment that I made earlier about cash is that, especially when you're running a business that is very heavy on equipment, inventory, that's tying up a lot of cash, especially in your earlier years, even if you're going to be making profit, there's not a lot of cash available because it's all tied up in your inventory, right? And so that's where we're trying to get to, where we want to maybe bring in funding, or uh, sometimes it does make a lot of sense to leverage the business to some degree and to borrow to cover that inventory cost to make sure that you're paying yourself, and that you can still run a profitable business. So that's one thing I would say is that we really want to focus on getting the owner to that place, right? The other question was on the reschedule, right? You asked about the reschedule.
Mm-hmm.
And the main thing about the reschedule is that we all know that 280E goes away. I know everybody listening probably knows what that is, but just in case, 280E essentially disallows ordinary business expenses. And so, when I was talking earlier about making 15%, if you can't deduct any expenses and you make a 15% profit, you're probably going to pay all of it in taxes, or pretty close. So you may end up with a 2 or 3 or 4% profit after all that work. So it's really important in cannabis, whether 280E or post 280, to start to scale, because that's one really way around it. Is this the smaller the business, where you're carrying more costs compared to revenue, it's harder to make a profit. So that's one thing I will mention in there, that is one of the areas where you really have to grow sales, but try to keep that overhead at a steady level, right? Because with growth, not all your costs are gonna increase, right? If you think about like rent or certain people,
Right.
so scaling is a strategy around that. Not just growing, but growing revenue, but keeping those costs pretty steady.
Mm-hmm. I mean, and in addition to the announcement of the rescheduling for the DEA, what about the impact of the continual stall of safe banking legislation?
Yeah, and look, the reschedule is by far, out of all the policy things that we talk about and that are going on, um, it's the most impactful, because 280E goes away and companies can pay taxes like any other normal taxpayer. So there's really three things going on from a policy standpoint, and then I'll get to safer banking. Uh, but it's the reschedule, right? And then you're hearing a lot about companies filing amended returns and going back 3 years, and then safer banking. Um, the tax ones that I mentioned are the most impactful, because they're actually bringing cash in. But safer banking, I think there was a chance it was going to be attached to another bill here recently, and it did move forward, and it continues to be a sore subject. Um, the thing about safer banking is that even if safer banking passes, you still will have a lot of institutions that are going to wait a lot longer before they decide to bank cannabis companies. And so the reality is that you have a good amount of financial institutions that are willing to bank cannabis, and that's what we do as virtual CFOs is we build these relationships with these banks, make those introductions, and make sure that our clients have a banking institution that they're working with. But the other piece that safer banking could really help with is that you could have branded companies to start to branded credit card companies to start to enter the space. And so that goes back to where we were talking about the size of transactions. If you're able to use a regular credit card, um, you'll likely spend more money, right? And so there's a lot of solutions out there, but if it gets much easier to make a purchase, those sizes of those transactions will continue to increase, and it means more profit. The other part that I always say about that is there's also going to take some time as cannabis consumers who are used to paying with cash or gotten used to it, or there's going to be a portion of consumers that are still going to pay with cash, right? So in my mind, safer banking isn't the most impactful piece, but it is going to help. And as you know, you can have more options, and then you can have more credit card companies start to enter the space.
Right. That all makes sense. Well, Guillermo, as we wrap up, I want to ask you, are there any other broader strategies for optimizing profitability in the cannabis industry? And I mean, this could include leveraging technology, improving operational efficiencies, strategic financial planning. Do you want to touch on any of those in a little more detail?
Yeah, the big one is forecasting, right? Is just understanding what your numbers are going to look like. And it's more than just a budget. It's really updating it monthly and seeing where you're going to go. And so that's a big piece of your strategy. The other part that we didn't talk about, but is again, it's even more impactful than the reschedule is a lot of cannabis companies are having to decide right now if they're going to amend tax returns for the last 3 years, and that could bring in significant cash into the business. What I will say is that there's different methods of doing that, and you really want to make sure that you work with a tax attorney to document your tax position as a taxpayer for that, and make the best decision possible. Because what a lot of companies are doing right now is they're amending these returns. As you're working with your tax attorney, you can calculate what the potential penalties are going to be in case the IRS disagrees with your position. And you can set that money aside in an interest-bearing account, or what have you, to mitigate some of that risk. But I would say that you just want to make sure that you understand all the pros and cons, and that you are absolutely setting cash aside if you decide to amend your tax returns, because the last thing you want to do is run out of cash and then the IRS pulls that money back. It's really too early to tell. We've seen the first MSO that did it publicly and announced it was Trulieve, as you probably know, Kevin, but it'll take some time for all this to play out. So really, this is a way that a lot of companies are pulling cash back in, but there are some risks. So you just want to make sure you mitigate that by setting some of those funds aside.
Right. Well, you've shared a lot of great information. I mean, you shared with us your journey into the cannabis sector, your role currently as the virtual CFO. We talked about profit-focused strategies, as well as additional strategies that you just touched on, economic environment, and so on. But now I have the final question, which is the big one, Guillermo, and that is, when does one hire a virtual CFO?
Yeah, good, great question. A lot of times we get the question pre-revenue. It's usually our clients are post-revenue. You know, they've applied for a license and they're up and running. We're talking to them before that. But as you get up and running, usually in the $2 to $10 million range is usually when companies will makes a lot of sense to hire virtual CFO, compared to the cost of hiring a full-time team. But you're not too early where it's a cash flow problem is right when you want to do that. And you want to stay somewhere between less than 5% total cost of your revenue when you're hiring a virtual CFO.
Good to know. Well, that's a perfect segue. Where can they get in touch with you, Guillermo? Website, email, any type of contact information you want to share. And of course, I'll add that to the description box on YouTube.
Sure. Best way to find me is on LinkedIn, and in the notes there, it's got my name. Just look for me on LinkedIn. I'm pretty active there. And our website is Summit Virtual CFO by Anders. Just Google Summit Virtual CFO by Anders. My name will pop up there if you put in cannabis or something like that. There's also a link there to schedule a call with me and get in touch with me that way.
Guillermo Rodriguez, everyone. I really appreciate your time, man. This was a pleasure, and thanks again for all the great insights. I know that I got a lot out of it, and I'm sure the audience did as well.
Thank you, Kevin.
Yes, sir. And thank you all for listening. Bye.
Cannabinoid Connect, the nation's most diverse cannabis-related podcast.